Are you speaking? Because I can't hear you again.
Okay, it was on mute, guys. Shazam. Because when I go in, it's automatically mutes. So I am so sorry about that. Well, thank you for saying something. All right, so in converting a decimal, guys, to a percent, you are simply moving the decimal 2 places to the right. So like that 0.375, if you are converting it to a percent, you move the decimal 2 places to the right, so you end up with 37.5%. So guys, it's an easy step right here. Now, the other way to do this is to simply multiply by 100. So you take the decimal, multiply it by 100, and I'll take that decimal and it will become a percent, guys. So this part right here is super easy. Now, here's the part that everybody needs to pay attention to, because the remainder of the chapter has to do with converting. We are simply converting what's going on here. Huh. Okay, guys. Hold on a second. Okay. Well, what was going on? Not quite sure. Okay, there we go. I hope this works. Okay, there we go. Converting percents. This is the majority of the chapter, guys. You're converting to percents to decimals. Now, on your calculators, many of you have a percent key on your calculators, perhaps not on the graphing calculators, but you do not need to use a percent key, guys, because by the time you're going through section 3, 4, you'll be so used to this, you'll automatically be able to convert a percent to a decimal. So to convert a percent to a decimal, guys, you simply move the decimal. Take your decimal place, move decimal 2 places to the left. Move the decimal place 2 places to the left, or you can go ahead and divide by 100. Either move 2 places to the left, or you go ahead and divide by 100. So here are some of the percents you're going to see very frequently tonight, okay? Like if you have 25%, you drop the percent symbol and take the decimal from here, guys, and move it over 1, 2 places to the left. So 25% as a decimal would be 0.25. Now, if it was 8%, you drop the percent symbol, move the decimal 1, 2 places to the left. That empty space here, you want to fill in a 0 for it, so you end up with 0.08, guys. So we are converting percents to decimals whenever we're dealing with these application types of problems, guys. And so get comfortable with this, because this is what we are going to be doing, okay? So guys, next thing, let's talk about sales tax. Now we're getting into the work. We're going to talk about sales tax. Sales tax increases the price of an item. So in other words, you are adding the sales tax to the price when you're finding sales tax. So it makes items or whatever you're purchasing more expensive. So in order to calculate sales tax, the sales tax is equal to the price times or multiply by the tax rate. Now, what in the world am I talking about? For example, if I were to go to the mall and I wanted to buy a pair of jeans, and the pair of jeans are $40, and the tax rate in Martin County is 6%. You guys verify that for me. I do believe it's 6% in Martin County. Here in St. Lucie County, it's 7%, but in Martin County, I believe it's 6%, because the mall is in Martin County. Now, if I wanted to purchase this pair of jeans for $40 at 6% sales tax, what would be the total cost of the pair of jeans? So guys, here's how we're going to do it. We're going to calculate the tax. So we take the price of the item, which is $40, and then we're going to multiply it by the tax rate. The tax rate is 6%. 6% as a decimal is 0.06. So you grab your calculator and you multiply this, you get $2.40 in taxes. So in order for you to purchase this pair of jeans, not only are you going to pay the $40, you also need to pay the taxes as well. And the tax is going to increase the price of the jeans to $42.40, guys. That's how much you have to pay for the pair of jeans to get out the door with the pair of jeans in order to take those pair of jeans home. Any questions, guys? All right, so let's keep going. Very straightforward. Now, let's talk about a discount. When we talk about the discount, guys, everybody loves a good discount. A good discount reduces the price of an item. Now, to calculate the discount, you want to go ahead and take the price and multiply it by the discount rate. What is the discount rate? So we're gonna go back to the pair of jeans again. Now, this time, the pair of jeans are still $40, but you know, Macy's loves a good sale, so they're gonna be 30% off the regular price. So guys, the question is, how much are you gonna pay for the pair of jeans after the discount? The first thing they might ask you though is, what is the discount amount? How much discount are you getting off that $40? So you would take the $40 multiplied by the discount rate. And in this case, the discount rate is 30%. 30% as a decimal, guys, is 0.3. So you're going to get a $12 discount on the pair of jeans. Now that you know the price of the jean is going to be reduced by $12, what would be the sale price of the pair of jeans? So the sales price would be $40 minus a discount of $12. So that would drop the pair of jeans down to $28, guys. I like this price much better than the $40. This is why everybody loves a good discount. Now, I need to also say this, guys. Personally, when I go shopping, I don't care about the discount percent. What I care about is what am I gonna pay for the pair of jeans? If it's 30% off, what percent of the original price am I gonna pay? I am going to pay 70% of the original price. If the original price is $40, 70% of $40, as in 70% converted to a decimal is 0.7, guys. So 0.7 times 40 is 28. So this is another way and one step for you to go ahead and figure out the sales price. Once again, guys, when I go shopping, I don't look at the discount. I look at how much I'm going to pay for the item after the discount. So rather than calculate the 30%, I would just calculate the 70% of the price, which would give me that 28. And then I would have to decide, do I want to go ahead and pay $28 for the pair of jeans, or do I just want to go ahead and bypass the pair of jeans until they're further discounted? Now, guys, while we're on this subject, when we're talking about Macy's, did Macy's file bankruptcy? Was that one of the companies that filed bankruptcy, or it hasn't filed bankruptcy? I feel like it was one of the ones that got caught up in the pandemic. Anyways, besides the point. So guys, quick question for you. You go to Macy's, there's a 30% discount. And then they tell you if you use your card, you get an additional 20% discount. Does that mean you're going to get an overall 13% discount, guys? I mean, 50% discount. Does that mean that you're going to get 50% off the price? What do you guys think?
No.
Nope, you won't. This is a business, guys. They are in the business of making money. If the jeans were $40 and they were to give you a 50% discount, if they combine the two discounts and make it 50, then they would sell you the jeans at $20. But no, guys, they don't do it like that. First, they take off the 30%, which drops the jeans to $28, and then they take off the 20%. So they would calculate the 20% of 28, which is going to give you $5.60. So they would subtract the $5.60 from $28, guys. So that would leave you with $22.40. So you're not gonna pay $20 for the pair of jeans. You would pay $22.40. This is a business. They want to make as much money as possible, guys. Okay. So that's the discount, guys. So taxes increases the price. Discount reduces the price, guys. So be careful with this part right here when you are working with these problems. And of course, you are probably going to see them on the test. So here's the next part of this lesson, 8.1%, increase or decrease, percent increase or decrease. When we talk about percent increase, percent decrease, guys, here's the little formula that's going to help you to figure it out. So you want to find the difference between the original amount. How much was the original, okay? And it doesn't necessarily have to be a price. It could be like the number of, I don't know, pounds you lose. You were 150 pounds and you went down to 130 pounds. What was the percent decrease, okay? And then you're going to subtract the new amount. And then you're going to take this and divide it by the original amount, okay? So when you divide it by the original amount, this is going to give you a decimal. But guys, remember we're looking for a percent. So in order to get it to become a percent, we got to multiply it by 100, okay? So whether you're doing percent increase, percent decrease, you take the original amount minus the new amount, whatever that difference is, you divide it by the original times 100, and that will give you the percent decrease or increase. Now, here's a quick example. Let's say the price of the jeans went from $40 down to $25, guys. What was the percent discount? So you would take the original price of $40 minus the $25, and then you divide it by the original amount of $40, and then multiply this by 100. So 40 minus 25 is 15. 15 divided by 40 and then times 100, and that would give you a percent discount. So if you take the 15 divided by 40, it gives you 0.375. And if you times this by 100, guys, this turns out to be 37.5% discount. So that would be your percent decrease. Now, questions on this one, guys. These are very straightforward problems. We haven't gotten into anything that's remotely difficult, guys. So here comes the next part, guys. This next part right here, we're looking at the other percent problems, the other percent problems. What kind of percent problems am I talking about? I'm talking about these type of percent problems. 3 is 60% of what number? 3 is 60% of what number? Now, there are two ways to do this, guys. You could create a nice equation for this, or you could create a proportion. So let me go ahead and explain how to create your equation. There are key terms in here, key words in here. Is, the word is means equal to. Ooh, where's my equal sign? This is not writing. Okay, let's try this one more time. Okay. Is means equal to. The word of means multiplication, guys, multiplication. And then number, we don't know what it is. You could go ahead and plug in a variable for it. It really doesn't matter. So if we were to convert this, guys, to an equation, we'd start off with the 3 equals to 60%. Now remember, 60% as a decimal is 0.6. You got to convert all those percents to decimals. So that will be 0.6 of what number, as in times what number. Now, remember, guys, you don't have to use the multiplication symbol. You just put the variable right here, guys, next to the number. So this is the equation you would end up with. And then to solve it, you would divide both sides by 0.6 and throw this on a calculator and let the calculator calculate it for you. So this would come out to be 5. So 3 is 60% of 5. That's what it's saying. Now, another way to do this problem, guys, is to go ahead and create a proportion. Now, when we talk about the proportion, you have to set it up the right way. So you want to do the is number over the of number, and it will equal to the percent over 100. It really doesn't matter which one is on the left, which fraction is on the left, which fraction is on the right. So guys, the percent is 60. It's out of 100. The is number is 3. The of number, we don't know exactly what it is. We're going to call it n, or you could call it any variable you want. This is a proportion. What is a proportion? You have two equivalent fractions. So to solve this proportion, you want to go ahead and cross multiply. When we're solving a proportion, we cross multiply. So 60 times n is 60n. 100 times 3 is 300. And then you divide both sides by 60, guys. Look at that. It takes you straight to the answer. So you get n is equal to 5. So here are two ways for you to deal with these percent problems. Let me present you with some additional examples so you can feel a little bit more comfortable with this, guys. So here we go. Now, this next one right here, it says 18 is what percent? Now, look at this one right here. There's no percent of 90. So we don't know what the percent is. We're going to call it P over 100, Y over 100, because percent is a number out of 100. The is number is the 18. The of number is 90. Now we're going to solve it. We're going to cross multiply and solve it. When we cross multiply, we get 90p is equal to 1800. You want to divide both sides by 90 and then simplify this, guys. So these cancel out. 9 goes into 18 2 times with a 0 left over. So guys, there it is, 20%. 18 is 20% of 90. Guys, I like questions. You can drop your questions in the chat, or you can go ahead and turn on your mic and ask me those questions, guys. I love questions, so make sure you ask your questions, okay? No questions? No.
Could you please do one more example of that?
Oh, absolutely. Yes, we can definitely do that. Okay, guys. So here comes another one. Let me see here. Let's do 40 is what percent of 65? I'm just making this up, okay? 40 is what percent of 65? So I am going to go to the proportion because I feel like the proportion makes a lot of sense. The percent, we don't know what it is. So we're going to put it over 100, P over 100, because we don't know what the percent is. The of number, the is number is the one that goes in the numerator. That's the 40. The of number is the one that goes in the denominator. That's the 65. Now, what you've done is to create a proportion. A proportion represents two equivalent fractions. And to solve a proportion, you cross multiply them. So you get 65p is equal to 4,000. And then you want to divide both sides by 65, everybody. All right, so we're going to put that into a calculator. 4,000 divided by 65. Let's see what I get here. Okay, this one is going to turn out to be a decimal, so I'm just going to round it. 61.54. 61.54. And that's a percent, guys. That's a percent. Now remember, I am going to be going into the assignment and doing example problems with you guys. So hang on. If you have a lot of questions, wait until we get to the assignment. Once we get into the assignment, you can go ahead and ask additional questions. All right, guys. So hopefully you're feeling a little bit more comfortable, but there are more questions in the assignments that we'll be going over. That was lesson 8.1, guys. Now we're moving into lesson 8.2. One of my favorite lessons to teach. But I like to teach it during a special season, guys. Why? Because this is on income taxes, income tax. So we're talking about income tax. Now, let me just say this, guys. A great individual once said, there are two things in this life that are for sure. And those two things are death and taxes, okay? Everybody has to pay taxes. What type of taxes do you pay? Obviously, you're going to pay income tax. You have payroll tax, which is where your income tax comes from. We talked about sales tax. Any other taxes? Any other taxes, guys? Income tax, payroll tax, sales tax.
Do we have state tax?
State tax. Does Florida have a state tax?
I don't think so.
What else, guys? Is there such a thing as a death tax? Huh? Is there such a thing as a death tax? Okay. So basically, guys, federal taxes, state taxes, municipal taxes. In the state of Florida, we do not pay taxes. But if you were to go to a state like the state of New York, not only do they have to pay the federal taxes, they also have to pay state taxes, and sometimes they have to pay local or municipal taxes, guys. So they have to pay 3 separate taxes depending on where you live in those areas. But in the state of Florida, all we have to do is worry about our federal taxes. All right, guys. Additionally, let me just say this. Most Americans can file their taxes for free. You can file your taxes for free. How do you file your tax for free? You go to irs.gov and actually find a free service like H&R Block. Yeah, I know they charge people, but there's a free version of it. There's TurboTax, everybody's favorite, okay? There's Tax Act, there's Tax Slayer. So there's a whole bunch of websites, guys, where you can go and file your taxes for free and you never have to pay for them. Most individuals who go to H&R Block and pay, no, not this one, H&R Block and pay a whole lot of money to file their taxes, they can do their own taxes. On average, if you go to H&R Block to file taxes, if you're a family of 4, they're going to charge about $250 for your family to file your taxes. That's a lot of money, guys, that you could keep in your pocket. $250, that's a car payment, okay? So guys, listen, don't be afraid of doing your own taxes. The technology is so easy. You can even scan your little W-2 in there. So guys, let's go ahead and get started on how we file the tax return. This is going to seem harder because we're doing this on paper. But if you were to file your own taxes, you would do it electronically and it's so much easier. You just follow through the questions and finish it up, guys. All right, guys. So in order to file taxes, you need to have some form of income. In this case, gross income. And when we talk about gross income, we're looking at income from all sources. Now, guys, let me tell you something. Let me put you at ease right now. This will show up on the test, but this will not be on the final exam. For some reason, they never put them on the final exam. I don't know why. Okay. So gross income represents income from all sources. So what type of incomes would a person have during the year? Well, their primary income comes from their job, which we refer to as wages. Also, AKA your W-2 wages. Now for the W-2 wages, guys, you are to receive your W-2 by January 30th of every year. January 30th is the deadline for your employer to send you a W-2. Now, how do you know? How do you have an inkling that you're going to get a refund? Look at box number 2. When you look at that W-2, guys, okay? You have a box number 1, you have a box number 2. If you pay taxes, if you look at box number 2, you pay taxes to the government, there's a possibility you could get some or all that money back. Okay, so besides wages, guys, you could also get money from tips, income from tips. Then we have interest, from your investments, your bank accounts, investments in of itself. Now for the investments, guys, this year, a lot of people started getting into the market and investing in the market. For example, some people who bought Tesla this year, hold on a second. Yeah, in 2020. Back in January, I think Tesla was trading for like $300 a share. Don't quote me on this. But Tesla shares went all the way up to 2,500 right before they split. So if somebody bought one share of Tesla, that one share of Tesla would make them a profit of 2,200. That's a lot of money, guys. This profit, if they sold the shares, they have to claim it on their tax return. So they have to report it as investments, guys. So that's a type of income. Additionally, guys, there's more, okay? So let me see if I can add some more over here. If you own a property that you're renting, rental income, that's income to you. Dividends, you guys know what dividends are? Anybody? Okay. Dividends is very similar to interest. This is money that is paid out to you for owning certain companies that pay dividends, like AT&T is one of those companies that pays a dividend. They pay $2 a year. So if you own 100 shares of AT&T, during the year, you could make $200 in dividend. So you would have to report that. Also, guys, this year in particular, here's something else that a lot of people had to deal with: unemployment. Okay, if you collected unemployment and they didn't withhold taxes from you, you're gonna have to claim it as income and you have to pay taxes on that. Oh shoot. Anyways, I didn't mean to write the S up there. Okay, unemployment.
But the unemployment, as long as you take out the taxes, you don't have to report it as income after that, correct?
You have to report it and include the taxes. All of that is reported to the government. They just want to make sure once they combine it with the income that you made during the year to decide whether or not you underpaid or overpaid taxes.
Okay,
yeah,
got it.
All right, guys, here's another big one: gambling. As in, you go to the casino, Hard Rock and Fort Lauderdale in Hollywood, and you make some money. Anything in excess of $500, lottery ticket, same thing, you have to report it. By the way, they do take you to the back, ask you for your social security number, and send that information to the government. So gambling winnings, the winnings. Now, if you're claiming the winnings, you can also claim your losses. So for those people who invested in the market, if they had a loss, some of their stocks didn't perform, they could report it too as a loss on their tax return. Now, quick question, guys. Child support. Should we report that? Is that income? What do you guys think? Child support.
Isn't that isn't that considered income?
Nope. Child support is never taxed. What about alimony? Yep, alimony is considered income. I know, okay? So essentially, your significant other, your spouse, your ex-spouse, I should put that in there, okay, is paying you, so you're getting paid by your ex-spouse, therefore, you are making an income, all right, guys? So these are all the sources of income. So all of that adds up to gross income. Now, once you have your gross income, the next part of this is the adjusted gross income. Notice I'm putting adjusted. So we're going to adjust your gross income. How do we adjust it? We take the gross and we subtract any adjustments. What are the adjustments? This is typically money that you put into an IRA, an individual retirement account. So if you put money into an individual retirement account before taxes, it lowers, it reduces, it decreases the amount of money that you're going to pay taxes on. So to find your AGI, guys, that's what this is. The AGI is equal to the gross minus the adjustment. And the adjustment is basically your IRAs, like your 401k plan, your 403Bs, those are the adjustments. Now, guys, is it beneficial to go ahead and contribute to a retirement plan? Of course it is. Let's say you make $50,000 for the year, guys, and you decide, I am going to contribute $5,000 towards my IRA. Listen, guys, you no longer have to pay taxes on $50,000. The $5,000 is going to reduce the amount of money you're going to pay taxes on to $45,000. And most individuals, their goal is to pay the least amount of taxes. So the less money you have to pay taxes on, the least taxes you pay, guys. Okay? So hopefully that makes sense to you. Now, let's carry on. Oh, by the way, Shazam. Before I move on, guys, I need to say something because I love talking about money. I'm always talking about money. I'm always looking out for people's money. Why am I looking out for people's money? I look out for my money too. Okay, matching contributions, guys. If you work for a company that has a matching contribution, guys, please, please, please make sure you contribute at least the matching contribution. If you don't, you are essentially throwing money away. A matching contribution, guys, is nothing more than free money. Okay, what are some of the companies that do matching contributions? Verizon is one, FP&L, some of the hospitals. We also have AT&T. There's also Home Depot. So guys, if you work for one of these companies, I'm not necessarily saying just the ones on here, okay? There's other companies that will give you a matching contribution. Please, please contribute to it. You know what? I want to take a moment right now. Is there anybody right now, I love the 12 or 13 of you in here, that works for a company that has a matching contribution? Raise your hand or drop it in the chat. Anybody? Anybody? Brianna said yes. All right, Brianna. Alicia says yes. Tavian says yes. Oh, Tavian, you said my favorite company, Shazam. I love this company. Alicia, what's your company? Brianna, what's your company?
I work at Martin Health Center.
Okay, so a hospital. What about you, Brianna? No? Water's Edge. Okay, so that's another hospital. Now, I hope you ladies are at least putting in the matching contribution. In other words, guys, if the company says, I'm going to match up to $3,000 for you, you must put in the $3,000 and they will put in $3,000 for you. So at the end of the year, you no longer have $3,000 in this 401k. You will have $6,000, guys. Guys, you put in $3,000 and they give you $3,000. So now you have $6,000. Where in the world do you go and get money like that? So guys, seriously, I don't care what you have to do. Even if you have to go and get another job, if your company offers a matching contribution, take it. Don't leave a single penny on the table. Take it all and invest that money. Let that money grow for you. All right. Now, Publix. This is one of my favorite companies. Why, guys? Because the employees own this. So they have stock options. After an employee has been working for Publix for 1 year, they get stock option in the company. And furthermore, guys, you can add more to it. You can buy more stocks. Personally, Tavion, what I would do is this, Sweetie Pie. I would buy as much stocks in this company with my little paycheck as I possibly can. I would go and get a second job, take my entire Publix paycheck and buy stocks with it. You hear that? Guys, it is a beautiful thing. So some of these people working at Publix, they're sitting on $1 million, okay, accounts, portfolios, okay? That's how good Publix, the company, is. And if you have a child that works for Publix, you can even get your child to contribute their paycheck and buy more stocks. And then you pay your child, okay, people? Listen, the money's out there. You just got to go out there and find the money. It's there, guys. Just go look for it. It's out there, okay? So one of the questions you should ask the minute you get your job is this, guys. Do you have do you have a retirement plan? And if they say, yes, I have a retirement plan, do you have a matching contribution? You hear the follow-up question? Do you have a matching contribution? Now, if they say no, how about this? Do you have stock options? As in, are you gonna give me stocks in the company, guys? These are phenomenal questions to ask when you first get a job. If you are already working for an employer and you don't know if they have a retirement account, if they have a matching contribution, if they have stock options, what should you do? Just go and ask them. Go and ask them, guys. By the way, did I tell you that this chapter has a lot to do with financial literacy? Okay, guys, so here we go. If you're one of my, let me see, show of hand, raise your hand, guys, if you're under age 25, under age 25. Under age 25. Do you guys not even know how to raise your hand on here? Tavion. Okay, Tavion. I see you. You better keep put. Okay, so that's 2. Okay, great. So guys, listen. You guys have time on your side. Time is a precious commodity. So the earlier you can start investing your money, the more money you have, and of course, the earlier you can choose to retire. Okay? So guys, listen, keep contributing to those retirement accounts. Next, guys, taxable income. The taxable income, guys, is simply this: your AGI, which we just finished talking about, the adjusted gross income, minus your exemptions, and then minus your deductions. Now, this is going to be really hard to do, especially since I can't show you the textbook right now. But guys, listen, if you were to go to the textbook, there is a tax table in the textbook. There's a tax table in the textbook. Every individual that is on a tax return is allowed one exemption, okay? Every individual on a tax return is allowed one exemption. So the exemption, I think, is about $4,300. Don't quote me on that, guys. I gotta go look it up, okay? So this is $4,300 per person, So if you got a tax return that has 4 individuals, husband and wife, and 2 kids, so you would take 4 and multiply it by 4,300, and this will give you the total exemption amount. Now, guys, what is this doing? What are we doing here? Okay, listen. The AGI is a number. It is how much money you have that you're going to be paying taxes on it. Your goal is to take that AGI and reduce it to the lowest possible amount. So you take your AGI, you minus the exemption. That lowers the number. Then, guys, you have your deductions. Now, this is where we're going to pause and take a little break and talk. The deductions. You have 2 types of deductions, guys. You have standard, which is what the government gives you, okay? Or, and I'm going to put a big or right here because it's either one or the other, or you have itemized deductions. Now, the standard, guys, has been changed as of last year. They changed it, the standard deduction. So the standard deduction right now is greater. Because the standard deductions are greater, it's harder for individuals to itemize that deduction. So they have to come out with larger numbers to beat the standard deduction. All right, so having said that, what are itemized deductions? Now, for the itemized deductions, these are options that the government allows you to claim on your tax return. So what are some of these itemized deductions? The number one itemized deduction that most individuals have is mortgage interest. Mortgage interest, that's number one, guys. That's what causes you to itemize. Next, we have property taxes. Property taxes on the home that you live in, property taxes on the home that you rent, property taxes on your vacation home, property taxes on your land, pieces of land that you own. All of those you can claim them on the tax return. Sales tax, even though we don't pay state taxes, we can claim sales taxes on our tax return. By the way, the days of carrying around a shoe boxes with receipts, they're gone. You just type in your income is in there, type in your tax rate for your county, and automatically, guys, you will get a certain sales tax amount when you file your tax return. So you don't need a shoebox. Charitable contribution, guys, whatever you contribute to charity, it can be money, it can be clothing items, any items that you contribute. It could be stocks, it could be your time, it could be your old cars, it could be an old boat, old motorcycle, whatever you contribute to charity, you can claim it on your tax return, guys. Unreimbursed employee expenses. For example, my people who work at the hospitals, okay, you have to pay for your uniforms. You can claim that on your tax return, guys. By the way, for those of you who travel for work, you can claim your miles. If you have to travel and go to some kind of retreat or some kind of professional development out of the area, you can claim all of that, guys. Medical expenses, now be careful with the medical expenses because everybody's always trying to claim medical expenses, but the medical expenses only works if it is equivalent to or greater than 7.5% of the AGI, the adjusted gross income, guys. So not everybody can claim medical expenses. Now, additionally, guys, I need to say this. If you you go ahead and retain the services of a lawyer, you can claim that on here. Yes. If you go to the casino and you lose a lot of money, you can claim that in here, but at the same time, you have to report your winnings as well. This is also where you report your losses from the sale of any stocks that you own, guys. So, guys,
What about childcare?
Oh, good question. That is that child care is actually a credit. It's not an itemized deduction. And credits are better than the itemized deduction because you see the itemized deductions here, they're reducing that AGI, okay? So it has the least amount of impact on the amount of taxes you pay. But the child tax credit goes directly to the taxes and reduces how much taxes you're paying. So that has a greater impact on how much taxes you're paying to the government. So guys, here's the bottom line. If you do your itemized deduction, it comes out greater than the standard, you go with the itemized. If you do this list, it comes out to be less than the standard, you go with the standard right here, guys. So it's either the standard or the itemized. You cannot take both, all right? So guys, once we have the taxable income, by the way, taxable income leads you to the tax table. This is where you're going to go now to calculate your tax liability, to calculate how much taxes you should have paid for the year, or the individual should have paid for the year, guys. So I am going to be doing some examples with you guys. I am going to do one example, okay? And let me see here on the video, and then I'm going to get out of the video, and then I will go ahead and go through the assignment and do some examples with you guys, okay? So on this one, guys, it says the gross income for this individual, gross income is $62,000. This person has an adjustment, and the adjustment is an IRA. He put $4,000 towards the IRA. All right. Now, he has a $7,500 mortgage, $7,500 mortgage. Then he's got a $2,200 property tax. And then he also has $2,400, which he contributed to charity. All right. And this one says he also has a $2,000 tax credit. Remind me to talk a little bit about the tax credits, because the tax credits have a greater impact on your tax return than your standard deductions. All right, guys, so you ready? So here's how we're gonna do it, guys. We're gonna start off with the total gross, 62,000. That's the gross, okay? Now we're gonna subtract the IRA. That's the IRA, the adjustment. That's the IRA. You guys with me so far? You guys okay?
Yes.
All right, one person, thank you.
I'm
All
good.
right, guys, here comes the next part. Now remember, every tax return, you must claim one exemption per person. I think the exemption right now, I can't look it up, but the one that I have on my paper right here is $4,050. Every individual on the tax return gets an exemption, guys, every person. So the exemption is per person. So there's only one individual on this tax return because he is single. He's a single individual. So we're gonna go ahead and subtract $4,050. That's the exemption. Here, let me put an E here for exemption. Okay, guys. So now we're going to subtract his itemized deductions. What are the itemized deductions? We have $7,500 mortgage. You notice I'm just going down the list, guys. We got $2,200 property tax, subtract. We're going to subtract all of that. That's the tax. Then we're going to subtract $2,400 for charity. I'm still subtracting. And why am I subtracting? I am trying to reduce, guys, reduce this person's taxable income to the lowest possible amount, okay? Next, guys, we've got a tax credit. The tax credit is the last step to the problem. This gets applied last. This is the last thing you do when you're calculating these taxes. That's the last step. So now grab your calculators, guys, and start subtracting all these numbers. So our job is to take that 62,000 and reduce it to the lowest possible amount, guys. So 62,000 minus 4,000 minus 4,050 minus 7,500 minus 2,200 minus 2,400. It will drop all of this down to $48,850. That's the amount of money that this person is going to pay taxes on. Doesn't this look much better than the 62,000? That is the point of all of this, guys. When you're itemizing your deductions, when you're contributing money to the IRA, you want to reduce this amount to the lowest possible amount so you can pay the least amount of taxes. Okay, so now, guys, time to go ahead and calculate a tax return. Now, listen, it's about 7:35. I know this tends to get a bit overwhelming. So I want you guys to go along with me, and you might get a little confused. It takes about 3 problems, 3 tax returns for you to really get used to this. So if you don't understand it the first time around, it's okay, guys, you will get it, okay? So guys, this is the person's taxable income. The taxable income is $41,850. Now we're going to calculate how much taxes this person should have paid for the year, guys. This is where we're going to go ahead and go into the tax table. So when we go into the tax table, what are we looking for? First, we look at the filing status. There are 4 filing statuses, guys. We have single, this person's single, married filing joint, married filing separate, and then we have head of household. Now, listen to this one, guys. Most people want to claim head of household, but in order for you to claim head of household, you have to have dependents. If you don't have a dependent, you have your dog, you're living by yourself, you're not a head of household. I'm not the tax police. I'm just passing on information to you guys. There's one last option when it comes to filing a tax return in terms of your filing status. there's widower too. And widower, you can claim it for 2 years after your spouse passes away. Okay, guys? So now, in the tax table, we're going to go into the singles column and use the singles column to calculate the person's tax liability. Okay, guys, this is where, okay, teaching online may not be the most feasible way of teaching this. So what I'm gonna do is to go ahead and pause this, and I am going to go to the book, to the assignment, so I can go ahead and continue with this problem because I need the tax table. I need you guys to see this information. So what I'm gonna do right now is pause, okay? My recording, I'm gonna stop it. And I remember that some of you said, you know what? You need to record some of the explanation. So I will record the explanation. So there's gonna be a part 2 to this, okay? So I'm gonna stop this recording so I can go ahead and go to the textbook right now, all right?